The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 19th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary day. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, how about you and I? We go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We go see what they're communicating to you and I just past 1 o'clock in the afternoon on the East Coast. And folks, I'm just absolutely grateful for your presence here. Now, I'm here to serve you. So feel free, pick up that phone, dial on in 877-927-6648. Internationally, 727-445-1044. By email, steve@tfnn.com. Of course, inside our Tiger's Den, you can instant message me at any point in time. Happy to take a look at whatever it is that you're looking at, add an additional set of eyes, and answer whatever question I possibly can. So the easiest way to do that is to reach out and touch someone on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 25 points at 17,762. We've got the S&P up about 2 points at 2,085. NASDAQ Composite up 14 at 1,590. Russell 2000 off 5 points, trading at 1166. The DAX closed up 125 points. The FTSE closed up 50. Goldilocks trade up 9 buckaroonies right now, trading at 1078. Silver's up 14 pennies at 1422. Light sweet crude back 51 cents. Natural gas back 3 pennies. High-grade copper is trading a bit lower. The 30-year bond is to the upside. To the upside, though, is C-Trip. It's taken a trip. It's up 19, almost 20%, up $18 and change. Chipotle Mexican Grill also up 18 bucks. That's 3%. Valiant Pharmaceuticals up 14%. That's 10 buckaroonies. JM Smuckers and company out there must be selling lots of jam and jelly, up nearly 9%. That's 10 bucks. Keurig Green Mountain Coffee Roasters up 22%. That's 9 bucks. To the downside, Analogic Corp. That's off about 10 bucks. That's 11%. Allergan down 3%, 9 bucks. Anthem off 9 bucks. Credit Acceptance Corp down 8 bucks. Athena Healthcare, I suppose it is, down 8. Humana. So we've got the healthcare sector that's on fire to the downside out there. As far as the sector, the XLV, that's 6.4 million shares off $1.11. So not good news out there for the Unaffordable Health Care Act. But let's go take a look at the markets. Let's go see what they're doing, and let's take a look at different time frames. We'll go wear different hats out there. I'd start off by taking a look at what the markets have not done, which is kind of amazing. Now, the day's not over. It's only 1:10 in the afternoon. But let's start off and take a look at our summation index out here. Close, but no cigar out there. We have seen the New York Stock Exchange price oscillator right now is a reading of minus 34. So the net advancing issues that it needs, I don't remember how many off the top of my head. It's just a few hundred or so. I'm really amazed that it has not been able to get above the zero level. But if we see the New York Stock Exchange get above the 10,450 area, that's really from the most recent high to the low that came in here on Monday. That's the 0.618 retracement, if I didn't already say that. And that would probably suggest you'd see price head to 10,534, and we'd see that price also to get above zero. That's really the key, is whether or not the bulls, believe it or not, are going to go ahead and take control of the market. the bears are the ones that still have possession of the ball, at least in the New York Stock Exchange. Aha. Also inside the NASDAQ composite. So as we take a look at it, its price oscillator slightly below zero, reading of -7. Out there, price is above the 0.618 retracement level. It is towards the high of its session out here. That would suggest to me that price is going to go ahead and get up into the 0.786 area. Well, guess what? When it does that, that's going to actually move into the swing point on the NASDAQ composite of November 3rd. That's all the way back up to its highs. That low is 5109. So therefore, if you see a close inside 5109.68, volume or not, it does not matter. It says the price will go tag that high out there. But it is still, believe it or not, it is still the bears that have control of the NASDAQ composite. They've been losing control, but they still have control. Same thing inside the Dow. Now, its price oscillator really just a tad below zero. As we pull this back, it too is above the 0.618 retracement. The 0.786 is 17,813. So that would be the next target. Let's go over to this chart here. It'll be a little bit easier to read. What the Dow is also doing right now, we can see it's really bumped its head up into that resistance of that little downtrend line out here. So that's a very short-term trend line. But the swing point, the most recent swing point, and the level that you're going to be watching for today is 17,796.02. Let's not forget the pennies out there, because if we see a close above that level, that says price goes and tests the high. That's unless there's some unforeseen circumstance, and there can always be unforeseen circumstance out here. But that looks like what it's trying to do. And maybe it's going to test that level, 17,796. Reject it. That would be a test of a swing point. Could be a test and rejection of a swing point. I don't know. But let's go take a look at, see if we get some kind of read inside the Dow Diamonds. Oh, I should have done this before the show, and I have to do it live during the show. Let me go find my. Let me go find my little tab out here. That way I can give you the read or the feel on volume. So the diamonds, let me see here. Lucy in the Sky with diamonds has done 3.6 million shares. That says it does about 6.5 to 7 million today. So that's the number that we're going to be paying attention to as the Dow Diamonds get up into that swing point from November the 4th. Now, that's got 6.8 million shares. So what we know is that the Dow Diamonds are attacking their swing point with similar volume. Very similar volume. So they're not attacking it with light volume. We're not going to worry about a couple 100,000 shares or so. Now, price has not gotten up into that level, to my knowledge. The low of 178.19. The high so far, it's 178.03. The high has been 178.04. Boy, just a few pennies away. Hard to believe that it won't be able to make that. And maybe it overtakes that level. I don't know. But if you do get a close inside that low of 178.19, it looks like you're going to have the volume to suggest that it goes and tests the high out there. Let's take a look at what's weak in the across the board here, which is the IWM. I won't say across the board, at least across my board. 15.2 million shares so far. That equates to 28 million shares. And actually, the candle formation is nothing more than a pause. That's just the pause button out there. Inside day, if we take a look at resistance, which it's testing, we've got resistance 1, resistance 2, even though the lines are green on my chart. That's 116.49, 117.08. And as long as those areas get rejected, because the volume to the downside is 39 million shares, so we know we're going to be up into it light today, or should be, because the volume ratio says about 28. Yesterday was 35 going into 39. Well, that's a coin toss there. Today could be today, if you see it close above 116.49, says you head up to 117.08. That's what's going on in the week indice as we speak. Inside of the QQQ series ETF, volume thus far 16.4 million shares. It says we do about 31 million shares today. If we take a look at that, this puppy is getting certainly close. So here's where we get to use that volume matrix out here. So the key number inside the Qs are going to be 114.54. Volume at that swing point is 28 million. I said that we're on pace to do about 31 million. So the Qs are actually attacking or getting into a swing point. They're not there yet, but they are moving up with volume when we take a look at that swing point. So that says if you close inside 114.54, you'll go test the high, not you, but the Qs themselves, and that price is 115.47. If we go take a look at the SPYs out here, they've done 51 million shares. Seems like light volume, heavier than yesterday. That says about 95 million shares. Let's go see what they're trading up into. They're up above all kinds of resistance out here. So let's go ahead and get rid of it. Those are the horizontal. Well, we're going to try to. I guess you got to hit the delete button when you do that. Let that be a lesson to you. Broke the short-term downtrend. We can get rid of that too. That doesn't need to be there anymore. There we go. Just hit the delete button. And so the swing point, let's go see where that swing point is. It's a trading day of November 3rd. The high is 211.66, or yeah, it's 211.66. So we'll just use the low. Now that swing point, which is November 3rd, 95 million. We're going to hit that with about 95 million shares. So it's moving into this swing point, not on light volume. You can't call it light volume because I don't know what it's going to be like at 4 o'clock. But right now we know the straight line method out here says you're moving up with some decent volume, at least compared to that swing point. 209.70 is the number. I have a request to go watch something on Netflix, it looks like. So let's go take a look at Netflix. NFLX is the ticker symbol out here. I must be one of the few that doesn't use Netflix out here. Just kind of old school, whatever that means. If we take a look at good old Netflix out here, this thing started breaking down really on the trading day of August the 20th out here. So, you know, we've got a couple, well, actually, ooh, I almost said that, didn't I? Let's not pay attention to that. How about that? Let's instead just go over to the swing point out here from the trading day. It looks like, I don't know, is that the all-time high, August 5th? Let me pull this back. Let me pull this back out here. Is it August 5th? Is that it? Yeah, of course that's it. Okay, so we've got a test here inside of Netflix today. The swing point we're looking at, all-time high swing point, August the 5th. That's got volume out there of 26 million shares. You've done 13 million. Let's go see what that equates to. 13.4 million says, hey, you can do 25. So 25 million going against 26 million, 27 million. So yeah, you've got Netflix moving up into the swing point. If it closes above 122.71, it almost assures you a test of that swing point high, which is 129.29. If we take a look at other swings here, what has happened volume-wise? October 9th, that did 22 million shares. You're up over 33 million. Yeah, so, you know, it's over. Small A to B equals CD to the upside. Now, when it's going against, that downdraft really began back, but that's 28 million shares, and you're up with about 25 today. So that says that's not defying the law of gravity. So Netflix looks pretty good as we speak right now. Hey, I know what you want me to take a look at. You are wanting me to. I heard it out there. Somebody said, Steve-O, when are you going to go take a look at Goldilocks? So let's go take a look at Goldilocks. Of course, we're going to do this when we get back from the break, but it's up $9, $1,078. But my question to you is, what period of time holds the record for the largest number of down days in a row? And by down days, I mean it closed lower than the open of the trading session out there. We're going to go find out, but not until we get back from this break. Steve Rhodes with TFNN. Dow's up 33, S&P's up 2. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 31. S&P is up a couple of points. NASDAQ Composite's up 17. So we were beginning to take a look at Goldilocks out here. And as we do, let's go take a look at a number of different things that we know about gold. Number one, we know that gold had traded below the swing point from July 24th. That low was 1073.70. Did it on light volume. Move down below that today. If we take a look at it, if gold were to finish here at about 1077, 1075, you would have a bullish reversal signal. You'd have a little morning star pattern out there. So that would be somewhat positive. But don't let the price movement in gold blow your skirt up just yet. Why do I say that? Well, there's a couple of different reasons out here. I had asked the question before we went into break. Do you know the period of time that has the longest streak of sessions in a row where gold has closed lower than the open of the current session that it's in? Now, I got an answer, which was back in the response of the guess was probably in 73 and 74. I think that was an excellent guess out there. But as I said, close but no cigar. Do you know where close but no cigar came from, by the way? Not to diverge or anything, but I'll give you a piece of close but no cigar. You may have used it in your life, so I might as well tell you where it came from. It came from 100+ years ago. I forget the gentleman's name now off the top of my head, who is, no, it was not George Burns. It really came from the state fairs. So back in the day in the state fairs, you've gone to state fairs, you know those games that they have, inside those areas, where every now and then they let somebody go ahead and win just to keep everybody interested. Well, and it really was fairs. They didn't really call them state fairs back then. I think it was over in Europe, as my recollection, where it began. But it doesn't matter where it was. It was at those fairs, at those games, at the games of chance, so to speak, out there. Now, back in those days, they hadn't developed, big stuffed animals out there. And so it was really gentlemen, or it was really men that played those games, right? We're going back, 100 years plus. It was really men that played those games. And what the prize was a cigar. And that is where close but no cigar actually came from. Now, the next time that you use it, you'll have that little bit of background information. Of course, I expect somebody to go fact check me out there just to make sure that I'm right, but I'm pretty darn certain I'm right. Just like I know that I'm right about what it is I'm about to share with you as well. The record goes to yesterday. The record is as of yesterday. Inside of gold, what we had was 15 down days. 15 down days in a row. We're talking consecutive days in a row that are out there. So, something to think about. Do you think maybe that gold is oversold? If we go back in history and find that yesterday or today now ends the longest streak, maybe we'll see how gold closes here, right? If gold somehow sells off and closes below today's open, that streak will continue out here. But really, and if we go back, my chart here that I've got data that goes back into the 60s, but if we just take a look at this chart here, which goes back into about 2002 time frame, the next prior, or very close to the next prior situation, just so we can give you a feel, back here on the trading day of September 18, 2013, we had 8 closes in a row. Now, did that really mark a bottom, or did that mark a bounce, an oversold bounce? Yes, exactly. It marked an oversold bounce out there. Of course, we can come back to the time period here in May 17, 2013. Did that mark a bottom, or was that a bounce out there? Yep. That's right. That was a bounce. We can go back even further here. It's really hard to find consecutive down days like we have out there. I mean, consecutive down days. We come back here. Looks like this is in 2006. Let me pull this back just a bit out here. Now, back in 2006, September 15, 2006, we had 8 in a row. I probably gave it a little bit. I gave it a little leniency there. It's really not 8 if we compare it to what we just did. And the reason why I say that is, see this day right here, September 13, 2006, that really voided it. It was really more like 5, but I figured, what the heck, I'll go ahead and throw it in there. Same kind of now we had 2, 4, so you had 5 down days in a row back here December 18th. It's really hard for gold. It has been really hard for gold to have that many consecutive down days in a row. January of 2005 out here, we had 6. Did that mark it was just really a bounce. So we know that gold is oversold out here, okay? So I think that much is really clear. And it's good to know that, hey, what we just experienced is the largest consecutive number of down days in a row in gold. Hey, let's just go ahead and summarize it right here. If we go take a look at our market profiles, let's turn those on real quickly. We can see that prices just simply run into pièce de résistance, the bottom of the weekly box out there. Nothing but an oversold little bounce going on in Goldilocks. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzamento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 21. S&P is basically flat out there. So, unless gold really gets some giddy up and go, what we know is we've got that an oversold bounce that's going on out here. Now, that doesn't mean that it can't extend gains out here, but be very careful. Be very careful. We got the U.S. dollar index back up fairly large today, off 60 pennies right now, trading out at 99.14. Let's go check in on some of the currency pairs. Had a request to go take a look at the Euro Great British Pound. So let's go do that out here. And as we take a look at this currency pair, let me turn off these market profiles. Here's really what we know about it. Here's the key levels to be watching. That's going to be, it's basically made a 100% move of a move by getting bets coming back into this little hammer candle right here, which is priced out. That's on the trading day of August the 5th, 2015 out here. So you can see that price is coming right back into a level of resistance, right into that hammer candle. Today, as we see it right now, looks like it's a morning star, similar to what we were looking at inside of Goldilocks. So this could be, this 100% move of move, this could be some fairly decent support out there. Now, don't know if if this individual is looking to trade the currency pair or we're just looking at it, I would say you'd certainly want to see at least, at least this trend line here get broken to the upside to give you any kind of assurance that you'd get some type of retracement out of this. That retrace, well, other than making 100% move of a move, you got a couple bullish reversal candles. Hey, the bounce could easily take up to 71 cents out there. That's in the euro, Great British Pound. If we take a look at the euro, Japanese yen out here, it has really just been traveling sideways. It hasn't been doing anything for about 4 days. It did complete a 1 to 1 A to B equals CD finally out here, but it has not taken off to the upside. So at this stage of the game, the only meaning that I can take from it is it wants actually lower price, get down right around the 129.29 level. If we take a look at the euro versus the U.S. dollar, that's what is putting some, this is moving higher. That's what's putting some weakness, or the majority of the weakness inside, but not all of it, inside of the U.S. dollar index out here. Still below this set of swing points out here in the $1.08 level. So just a little bit of a relief rally, it looks like, going on there. Looks to me like the euro wants to get back to 104, 105 type area. If we look at the Japanese yen, that thing is backed off fairly well today. But here's the deal. Inside the Japanese yen versus the U.S. dollar was really trading inside of this consolidation level out here. This was consolidating in between the time period of August 28th and broke out of that consolidation, the bottom of that consolidation down here from October 15th, from September 4th, right around the 118.6 type level. And if we take a look at the breakout here, wide-ranging bar breaking out of the consolidation on November the 6th. Typically, the move of a consolidation is equal to or greater than that consolidation. You do have a bearish reversal signal today, but until it gets back into the lower portion of that consolidation, or the basically above, back below the 121.73-ish type level out here, my assumption is going to be it'll resume itself and start moving up to 124.95, right back into the swing point out here from August 12th, 2015. So that's what's going on. And let's take a look at the Great British Pound, just simply versus the U.S. dollar out here. What we know about it, it's been trading in a descending price channel out here, found support at the bottom of that channel. At this stage here, this could continue to move higher and could run right into the top of the channel line and about the 155-ish type of level out there. So that takes care of our currency pairs. We took a look at the hard currency. We took a look at soft currency. Now let's go take a look at Texas tea, black gold, light sweet crude, trading out at 40.46. What do we know about it? It does not look good for prices moving higher. It looks better for prices moving lower. Where is it going to move to? Probably down to the August 24th lows. That's at 39.22. Why do I say probably? Well, if it breaks through that area, that happens to be a 1.618 expansion of its last set of swing points. That's 100% movable move. And if it breaks through that area, then I think we have to go back to a different chart. So let's go back and take a look at the continuous contract, try to itch and stitch this thing together. Let's take a look at a monthly time period out here. Here we go. So the monthly time period says, guess what? On a monthly basis, the low from August 1st, really, we were taking a look at that low just a short time ago on the daily. It's why you and I want to take a look at, daily, weekly, monthly charts out here. It's a monthly hammer. And that says the low of 37.75 is muy importante, because should that level fail, then what we're looking at, on the hammer candle, if you're long, you're wrong. Well, there's another hammer candle to try to back it up from back in the month of February in 2009. And that says that the price of light sweet crude gets into the 33.20 type level. And goodness forbid if it breaks through that hammer, two hammers in a row, then, who knows where it goes. If it goes back to, I don't know, $20 a barrel. Something along those lines. But right now, it is trying to hold this support area, but which the support is going to be that 37.75-ish. That's on the continuous contract. What was the price on the actual daily? Was it 37.75? Probably not. No, it's 39.22 out there. So, you got to have both. You got to have both contracts up on your screen to pay attention to what it is doing. But that's what's going on in the case of light sweet crude. Does not look good for higher price, at least not just yet. We had gold. We've got gold trading to the upside. That means we've got some of the mining equities trading to the upside. Let's go see what they're doing. Of course, what we actually have is we've got Freeport McMoran trading to the downside. Let's go back to the currencies out there. Is the Australian dollar down today? Is that the deal? Because that would make sense, seeing FCX trading to a lower price. Australian dollar. No, it's not. Interesting. So FCX truly weak. Now this is a monthly chart out here, but the monthly chart shows that that the currency pair, the Australian dollar, is really just trading right into resistance. It broke through that long-term resistance line, taking you back into the 2001 timeframe out here. But nonetheless, it is printing higher today. However, FCX is not. Let's go take a look at FCX, see what it is doing out here. Carl Icahn obviously taking a long-term approach on this, as he does with many things out here. David White, I think, posted something that said that he sold his eBay stock out here. Right now, you've got Freeport McMoran coming into its wide price spread day, which was on the trading session of August 27th. That had 107 million shares to the upside. You're coming back today with 16 million shares, but it's trading below 856. That says, hey, guess what? Maybe it's going to touch 829. Maybe 776 out here. You'd sure like to see that Australian dollar give you some kind of reversal signal to head north out there. Then you could go ahead and trade either the Aussie dollar or Freeport McMoran, whichever the one you wish. Apple's up $1.81 as we speak. As we take a look at Apple, what's it doing? It's getting back up into, come on, work with me here. It's getting right back up into its most recent area of resistance, a gap down. That's on the trading day of November 10th. That was a critical pause. 59 million shares to the downside. It's done 30 million shares to the upside today. Let's take a look at what that actually equates to us. So 30 million shares says it does around 50 to 55, and it was gapping down with 59. That's not too shabby out there. So if Apple closes above 120.05, says she's on her way to go test the high of November the 4th. You take that out, you got an A to B equals CD to the upside that says we go visit the island reversal top from back on the trading days of July 20th and the 21st out there. I had a question. Let me see here. The email question was the breadth of the NASDAQ. Said, is the NASDAQ moving up today with a negative divergence? Still, I don't know the answer. Let's just look at it like this with regard to the NASDAQ. The NASDAQ composite, if it, it's still in the hands of the bears. No matter how, no matter what it is, we use as the final confirming indicator out here with regard to this nice move off of the bottom on Sunday out here. That that this truly was the bottom that now moves us up until, I don't know, sometime into December, maybe just before Christmas, maybe shortly after, maybe it's just the first week in January, sometime in that range out there. Not until this price oscillator gets above the zero line out here. And then we just don't have that reading. So I don't think there's anything else to read into it other than, hey, it's up against some resistance. However, quite frankly, there should be plenty of liquidity. Now, the Euro-Japanese yen is not exactly doing its share out here to assist with regard to the liquidity. But, making up for it happens to be the VIX index here. We can see that today. Yesterday was the first day in the last 5 for the VIX index to get below the 50-day exponential moving average. That's priced right now at 1771. And we see that today the high inside the VIX, 1826. It's currently trading at 1679. I believe that was the high. Let me see. Yeah, 1826. The high right now is 1679. It has rejected the 50-day exponential moving average. And as long as it's able to reject that level, that gives all the clearance for the markets to move higher out here. If we look at anything that could get in the way, let's go take the only thing that is short-term bearish at the moment. Truly, the only things, you got the summation indexes that still haven't broken their zero line. And the bearish elements, if we take a look at the NQ, it's pretty much straight across the board out here, where price continues to move higher and does it with less relative strength. But you got to admit, it's run a sprint/marathon, it's over since Sunday. All right, everybody went to sleep on Friday. big down day, figured the market was going to be moving lower. The reality is it just moved to the exact target that it should have. And then Friday evening, we get obviously and how about those Parisians, man? Talk about guys that take action out there. Action Jackson. You got to love it. You got to love it. At least I do. And so taking some really good, swift action out there to kick some, what do they call it? Kick butt, take names, something like that. In any event, and many people would have thought that was going to go ahead and rock the markets lower out there, but it doesn't. Never works that way. And in this case here, so it's made huge moves. So it makes sense, for price to struggle here because it's been, we had a huge update on Monday. Kind of took the day off on Tuesday. Huge update on Wednesday. Kind of taking the day off here on Thursday. I don't know. Tomorrow's going to be a huge up day or a down day. Just seems like to me. In this case here, if in fact the NASDAQ can get above its most recent highs out here, I don't know where the relative strength index is, but this is what's really just, suggesting that this is the only real short-term bearish pattern that we can see out here inside the NASDAQ. The reality is we step it up just a tad. We step it up to a 2-hour chart out here, and it says, NASDAQ wants to get to 46.96, 47.34, something along those lines out here. So no real significant divergent patterns. But, hey, the bottom line is it has not proven itself to you or I. It's just been one heck of a show. It's been a nice fireworks display. And the question is going to be, does it have enough to have a nice finale out here? And until it clears those zero levels, it ain't there. So that's kind of the overview. And we could go look at the ES Mini 30-minute chart. We won't. It shows the same thing. The Dow 30-minute chart, it shows the same pattern too. So so that's what's going on. Let's take a look at some of these. I mentioned some of the gold mining equities out here. I thought I mentioned them. Let's go take a look at Randgold, GOLD. Not doing a whole lot, running right into resistance. It looks like the resistance of this downdraft. It's got several levels of resistance. Hey, let's change the color. Resistance ought to be red. What is this green line that I'm drawing out here? So here's one level of resistance. Here's another. 6201, we can see that it got up into that. It's rejected that. The volume there was to the downside, 1.7 million shares. It's done 465. We don't even need to go do the calculator to know that you've got Randgold Resources running into resistance with light volume. If we take a look at Gold Corp, basically an ugly-looking stock out here. It too, at least it's above the resistance line out here. That was the downdraft on the trading day of November 6, 15 million shares. Up though with light volume, so no conviction behind its move out here. If we take a look at Nico Eagle, 1.5 million shares to the upside. This was had a downdraft here on the trading day of November 6th, 3.4 million. It's also up with light volume compared to that downdraft out here, but still one of the stronger dogs in the hunt inside of the mining sector. Let's take a look at some of these stocks that are moving to the upside and to the downside, of course. Oh, how about that XLV? We should take a look at the XLV. So XLV, down with 6.8 million shares. 6.8 million shares, that's the equivalent of, I don't know, that's the equivalent of, I got to type it in right, 6.8. Come on. There we go. 11 million shares to the downside. Let's go look at the XLV out here. It's got some hurt, some pain. How about that? It's really just an inside day. But as I say, 11 million shares. Yesterday does I'll be. How about that? Boy, this is one tough little cookie out here. Even with as much bad news regarding the healthcare sector, and maybe it's just they're not all getting out at the same time out here, and they certainly aren't. Yesterday, you had the XLV up with 12 million shares, and today you're pulling back, believe it or not, with light volume. Probably about 11 million shares out here. Nonetheless, major resistance at 73.26 out here, but it's not anywhere near that level as we speak. Dow's up 20, S&P is flat, Russell down 6, and we'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 15, S&P is flat, composites up about 8 points. Russell's down 6. So let's try to summarize what the market is trying to communicate to both you and I. And that's the following, because we've got the pieces here have not completely come together. Well, number one, we took a look at the summation index, and we know that when we take a look at the price oscillators and the summation index, they typically assist us with understanding who's got control of the ball. Is it the bulls or the bears? When the price oscillator is above zero, it's basically the bulls. Below, that's the simplest. There's more to it than that, but we're just going to go with the easy, keep it simple theory. Keep it simple, Steve. So in the keep it simple, Steve theory, the Dow, the NASDAQ, the New York Stock Exchange, still all below zero. The clear message there is that price is up against resistance. It has not been able to clear it. It's like, coming up against a resistance of, lifting more weight than maybe you normally do out there. You got, for a while, you're really working at it, and then finally you can add another 5 pounds, and the next thing you know, you're curling, 55, 60 pounds or so with one hand out there, one arm. So it's up against resistance. Now, with that being up against resistance, we took a look at the shorter term. That's on the daily chart. If it gets up above that, then you have to give the benefit of the doubt to the bulls. If we take a look at the 30-minute chart as an example for the ES Mini out here, we can see it's made a seventh wave. It recycled. It made a seventh wave out here. Price was moving higher with less relative weakness. It has sold off from that high, this high coming in at about 7 o'clock in the morning. And 7 o'clock in the morning, by the way, yesterday, right? Was it yesterday or that today? No, it couldn't have been yesterday. That was today, November 19th. So it has backed off since then. What the key area to be watching right now when I take a look at the ES Mini is probably the 2077.25 level. If we see a close below 2077.25, we should expect a further retracement to ensue out here. Now, is that going to be a viable retracement? That one's hard to say because the daily charts never made it above zero inside the price oscillator. So that actually says, no, not so fast, even with that nice move that we've had over the last 3.5 days out here. So that is really the message. And what is helping to hold the market up, believe it or not, at least the S&P. So we put it together with that ES Mini. And the last thing to really watch and put it together for you is going to be the VIX index. If you see the VIX index finish the day out above 1771, what I guarantee you is we will have seen the ES Mini on that 30-minute chart break below. And number two, we will not see any of those price oscillators get above the zero line. And that says retracement or top. Without that taking place out here, then the market can move sideways to higher. And that's really the that's the way I would take a look at the market. That's what I believe that is communicating to you and I at 1:57 p.m. But it may do something different at 2:15, and that's why we've got David White coming up. And so at this stage of the game, it looks more like a slow rollover than it does anything else out here. Because really, after the futures, which were up nicely earlier this morning, price should have been able to continue with its gains, and it hasn't. So that has to make you say, something to think about. So had a quick question here about volume. How do I use volume? I will tell you that the best ways to use volume, in my opinion, is they work great on individual stocks. So just take a look at price coming into swing points or passing swing points, maybe B points of the lightning bolt pattern out there. But inside the ETFs, inside the SPYs, the Qs, the IWM, and the diamonds, it doesn't mean diddly. And I don't know if it's because of high-frequency traders, because of hedging, individual days. It just doesn't mean anything. The Qs, though, what we know is they make lows with volume out there. Hey, just go check out August 24th. Stay tuned. Our man David White will be up next. Have a terrific Thursday. I look forward to seeing you on fantastic and fabulous Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.